Hi, it's Larry Gaines, Power Cycle Trading. I like to trade with a plan, and so what I'm looking now is I'm just following the broad markets, and I'm really kind of keying off some of the big correlated assets. And when I see the turn being made, then I like to use credit spreads, because credit spreads give me the opportunity to make money if the market doesn't go exactly the direction that I want it to go, and I still have a great probability of making the trade profitable. So what I'm looking at here is the Japanese yen. This is the yen futures, and you can see it's in a really tight squeeze here. So here's a compression squeeze. So this is a squeeze. You can see the range getting tighter and tighter. So eventually this is going to break either up or it's going to break down. Now when this decides which direction to break, right now the correlation looks like it potentially could break down, but it's still too early, a little bit too early to tell. So what I'm going to be looking at is I'm going to really be keying off the yen, and then if this starts keying down, it's going to have an inverse effect on the equities. So if you see the dollar yen, or well actually yen futures, make a dip down, this is going to push the equities up. Now you can see we're in a consolidation phase here on the NASDAQ and also on all the other major US indexes. And here's the S&P 500, the SPX. So you can see just kind of consolidating sideways, staying above these moving averages. So right now the market's not really telling you which direction, but it's starting to get a little bit top. You're starting to see momentum start to shift down a little bit. So if that is the case and I see yen shoot up, I'm going to look to put on a bear call credit spread on the SPX. Now if I see the yen turn down, that's going to be very positive for the equities, and at that point I'll probably look at doing a bull put credit spread on something like either the QQQ or probably the NDX, which is the CBOE. So that's what I'm keying off of, and that's kind of my plan. So you want to always have a plan and then go from there. So one of the trades I'll be looking at if the market does start pulling back would be to sell the March monthly calls, a bear call credit spread 22 days out. I'll probably be looking at the $18.95, $1900 call spread, and that would give me anywhere from $50 to $60 of credit, which is a pretty decent return, 10-13% return, way outside the money. This is an implied move. So with this kind of trade, it gives you a good chance to make money even if the market does trend sideways. Now, if you'd like to learn more details about how to use credit spreads for income, I'm doing a course this Saturday, March 1st, on credit spreads and income strategies. It's going to be a full-day boot camp. So please go to the link here on this email if you'd like to get more information, and I hope to see you this coming Saturday. Good luck trading.